Bitcoin is going to 200K by the end of the year, according to Bitwise CIO Matt Hougan. The biggest Bitcoin supercycle is already in motion. Governments are quietly buying behind the scenes, and if you're not paying attention, you might miss the greatest wealth transfer of our generation. So stay tuned.
Bitcoin is booming. Are you cashing in or missing out? At Drip2 BTC, we're rewriting the rules of Bitcoin investing. Earn up to 30% ROI on your deposits, unlock incredible Bitcoin discounts, and transform credit into up to 3,000% APR growth. No hassle, just real results. Don't wait, your future is one deposit away. Drip2BTC.com. Invest smart today.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. This is an old clip that was coming from David Lin and Bonnie Chang at one of the Bitcoin conferences, I believe, back in March. But I just wanted to bring this up because at the end of this, I won't spoil it, but there's just a singular fundamental thesis that I've been echoing on this channel that Matt says as well, and he explains it even for the boomers and people that are not willing to do the 100 to 1,000 hours of research on Bitcoin. And I think it's just all you need to understand everything and get your piece of the pie of this wealth that's being generated. But let's play a couple of these clips and you let me know what you think.
I think you're going to see 10, maybe more governments around the world make their first allocation to Bitcoin this year. It's happening. People aren't talking about it that much, but it's happening and it's a very big deal. So if I were looking for...
So this is what kind of starts off the laying the groundwork for where we're going this cycle. I know a lot of people feel like we've hit the top right now because Bitcoin is struggling to get back above that 109, 110 level to reach new highs. I pulled up, let me pull this up real quick. I did the monthly closes on Bitcoin. So we did have a monthly close higher than the previous all-time high. But we haven't broke that all-time high this year. So there's still some people sitting in the bearish camp, and we'll even hear some clips on here from Matt Hougan about potential for a recession. Now, if you follow my content and Raoul Powell's and some of the other macro economists, they don't believe we will see a recession. Matt doesn't either, but I don't want to spoil that. But there are people on that camp. So remember, I always want you to digest both sides of the coin because you never know what is going to actually play out. But the one thing you can do is just continue to stay humble, stack sats, and you don't have to worry about it because in a long enough time horizon, it is going up. That's all you got to worry about. But knowing that governments are stacking and nation states and they haven't even gotten the framework in yet for the real money to come in. And theoretically, that is scheduled to be done by this year, probably within the next couple months. I think I saw something about the stablecoin bill and some other stuff coming in to get some guidance and some regulatory framework, which will greenlight basically everybody else sitting on the sidelines waiting to nibble at this. So you still have a chance, an opportunity to front run all of that money that's going to be pouring in.
In the way I think it will. Every sign that I see suggests that ETFs are buying, corporations are buying, and governments are buying. That's why I'm so bullish, but they have to keep buying in order for us to get to that $200,000 target.
You said they keep on buying. At what scale are you talking?
Yeah, so last year ETFs bought 500,000 Bitcoin. Again, remember, the Bitcoin network only produced 165,000 Bitcoin. So it bought 3 times the total supply. Corporations bought 250,000 Bitcoin. Governments, I think this year could buy a couple 100,000 Bitcoin. So I think if you look at those 3 sources, I think they'll buy more than 1 million Bitcoin this year. And where is it going to come from? The only place it can come from is people who already hold Bitcoin. The only way they will sell is if the price goes up. That's why I'm so bullish on the market.
Sorry, government? Which branch of the government?
Look, the US already established a strategic Bitcoin reserve, right? It already holds $17 billion in Bitcoin. And the executive order from President Trump told the Secretary of Commerce and the Secretary of Treasury to figure out ways to acquire more Bitcoin without impacting the tax holder. How could they do that? They could sell some of the gold that the US has. They could sell other crypto assets that the US had and plow that into Bitcoin. I think we're going to see that happen this year. I think the US is going to increase, and not just the US. We found out that Abu Dhabi bought $500 million of Bitcoin. We've gotten calls from multiple other governments that are investigating Bitcoin. I think you're going to see 10, maybe more governments around the world make their first allocation to Bitcoin this year. It's happening. People aren't talking about it that much, but it's happening and it's a very big deal.
So again, that is the tidal wave that is lurking in the shadows, basically. We haven't really seen it. And that's what's going to cause all this massive FOMO and huge market pump. I've shown this chart before, and just to echo what Matt Hougan just said, the only way for people to acquire Bitcoin and at these large amounts like Michael Saylor is buying is someone has to be willing to sell their Bitcoin. And I don't know how many of these nation states, sovereign wealth funds are going to be looking at Bitcoin as a long-term store of capital and never sell it again. There's probably always a price point where it's attractive for someone to sell until we get to this Bitcoin inception or singularity, I believe, as Samson Mao said, where there comes a point where, and I think even also Jack Mallers, where you see that the government or someone else is willing to, they're like, yo, I'll give you 1 million, 10 million, 100 million, 1 billion. There's something that will flip in the mindset of the hodler that's like, wait a minute, if you're willing to part with this much cash for this thing that I have, how much more valuable is this thing that I have? Like, why would I then give up the Bitcoin for the thing that you feel is less valuable? But clearly, because that's how the trades work. You're willing to part with something that you feel is of less value for something that's more value. So there's going to come a point where whoever has the Bitcoin at that stage, they're going to be like, nah, I'll just keep my Bitcoin. And that's when, we reach a singularity where you'll be able to use it to transact with globally in different markets and still, of course, use it as collateral. But again, like I mentioned before, that is the risky side because you are putting your Bitcoin at risk, not only third party, but also liquidation due to the volatility of Bitcoin. So we see in this chart, the Bitcoin on exchanges, the balance, up at 2.6 million 1 year ago on exchanges. And we're sitting down here. Are we at all-time lows again? I think we might have reached the all-time lows. This one is 2.15, 2.17. Okay, not quite. So we're close. The all-time lows on exchanges was in February earlier this year. So all it takes is, like Matt just mentioned, a couple of more of these big players to buy Bitcoin. And he mentioned 10 governments alone this year buying it and people that are talking to him. And I believe that will definitely compound, especially as regulatory framework increases. And as we'll find out later on this clip, if governments step in to, offset a potential recession with more and more money printing. So again, I just keep trying to echo this idea that there is just too many positive tailwinds, catalysts built up that are supporting and propping up Bitcoin, that it's just going to take much more to destroy that or kind of make that U-turn for us to see much lower levels.
What is going to happen once we have a recession?
Recessions negatively impact all risk assets until the government decides to provide economic support.
So Bitcoin is a risk asset.
It is a risk asset in the short term. So if we look like we're driving into a recession and the government doesn't look like it's going to lower interest rates or provide quantitative easing or fiscal support, that will be negative for Bitcoin. That could send us back to the $72,000 level. It could send us potentially below that. But my guess is that governments will come in and support the economy. I think we've made it very difficult to have a real recession. I know we're talking tough in the US, but I think the government will ultimately blink. I think you'll see that in Europe. You're already seeing Germany doing that. I think you'll see that in parts of Asia. You're seeing economic stimulus in China right now. I think that's going to grow. So ultimately, I think we'll blink before we get a big recession. But if we do enter a severe recession, my $200,000 target probably won't happen. That would be challenging for Bitcoin.
Now, again, I am not the macro analyst, economist, but like I said, I want to always take in both sides of the narrative. And Raoul Pal has mentioned that, and even again, Jack Mallers and a couple others that I watch, that, they'll step in. A lot of people believe that will definitely have the government step in. And then somebody else I was listening to earlier today said that you can have different parts of the market in a recession, like the housing market, for example, but it doesn't necessarily impact a total macro US global recession. So really depends on from where you want to measure it. And this recession word is like the boogeyman just thrown out about, but I don't personally think that that's going to happen with this administration and with the tailwinds and stuff that they're putting in place. But we'll see. So if, like, Matt is correct of what he said, that takes a 200K price tag off the table. But I don't personally, again, I'm not the guru, I don't see the 50K levels coming back at all, even if we hit that recession. Like, it would take a lot more than that to cause that kind of meltdown. Like, for example, you saw what happened with tariffs. We didn't go down that far. And previously with COVID, where the entire globe was shut down, that was much more impactful, much more dramatic. And we still didn't see a drawdown that bad because the government stepped in. So I believe that that would be the same case here. Before things get too out of hand, they would step in. And you can already see that now again in the charts. So I believe it's already been priced in. And then worst case scenario, we'll revisit the 70s. But as I said before, if we break above the 120 to 140 level, I don't think we're going to revisit the 70s. I think the low will be in at 100K personally. So the higher we go, the harder it becomes to retest lower levels. I used to have, I think I got rid of it. It was like the 200 week moving average. Yeah, the multiplier. This is just a chart you can look at that shows the moving average over time. And where we're sitting at right now for the 2 year is 50K. So this always continues to go up because Bitcoin continues to go up. So let's just say we do hit into this recession range. Well, that might be later on this year, and that could put Bitcoin already at, the 120K range, and this moving average jumps up to, say, 60K. So it'll be hard. You can see in the charts that only in the bear market did we dip below that 200 year moving average. And this was the worst with the FTX collapse, where we were below that for about 17 months. But every time before that, we were only below it for a couple months. And again, as Bitcoin matures, I believe it'll become less volatile. So this cycle, last previous cycle, we had COVID, and then you had the FTX collapse with leverage. So unless there's another global shutdown and over leveraged player, like people are saying Michael Saylor is, but he keeps saying that he's done this in a much more solid, safu way, and I explained that as well, then I don't think we'll see something like this again, personally. But I could be wrong. So that's why you want a dollar cost average, and that's why you want to have some spare capital on the side. I still got buy orders in for the low 70s. But if we break above, like I said, 120, 140, then I'm just going to take those off and move them to a higher price range for those potential drawdowns. All right, let's go to this last clip from Matt, which is the spoiler I was talking about earlier, that this is the thesis or fundamental principles you need to have to basically make money in this. Not that.
I think both of those will exist in the market.
Speaking of ETFs, there's a growing debate as to whether or not actively managed ETFs or passively managed ETFs will become more dominant in the future. We're not talking about specifically XRP, ETPs, or just crypto ETFs. ETFs overall. What's your viewpoint?
So I am an index-based investor. My core view is that the thing I'm most confident about in crypto, more than anything else, is that crypto, the industry, will be much more important in the future than it is today. That this will be a 10, 20, $30 trillion market. That's what I feel the most if that's what you're confident about, just buy an index fund, because you're going to get that 10x appreciation. You won't have to pick and choose assets. I think active will have a place too, because it's definitely an inefficient market, and they're very smart managers who can pick and choose assets. Those managers just aren't me. So for my bet, index-based investing is the right bet for most people. But for sure, there's going to be a vibrant active market, and we know some great active managers out there. There's space for both to exist.
So that is the main point I wanted to drive home. And this is also the Raoul Pal everything code and don't fuck this up thesis, is that if you believe that crypto is going to be more important, more adopted, more utilized in the future than it is now, then he mentioned ETFs. So that is definitely a possibility for people that don't want to do their homework and they understand from a stock bond investment kind of side of things, they set it and forget it, 401k management style. Then yeah, I got nothing wrong with that. I would highly recommend people do their homework and buy it on their own, but there is definitely a learning curve and some fear when you're storing your wealth your own keys. Like, let's say you build up to whole coiner status and you've got everything saved on your cold storage wallet or keys in your head or whatever. Like, that is some serious heavy risk as well that you may not be ready for. Like, most people all their lives have always relied on someone else to protect their assets, and someone else they can point and blame the finger at. But if you get hacked, you lose your funds or whatever the case may be, there is no tech support, there's no refund, there's nothing. And that is a tough pill to swallow. So I can understand some people wanting to do the ETF side. But the main thing he mentioned is that, yeah, if you believe that it's going to be higher now than it is, higher in the future than it is now, then just buy Bitcoin. That's it. Or in his words, you buy the ETFs. And that's kind of what I've decided. That's why I've just been doing a dollar cost average every day. I wish I would have had it done it sooner, but I had to get out of the hole I dug myself in with the 100K I lost in the last cycle, 50K to Tom Bilyeu's shit show, and another 50K to the Drip network, and chasing meme coinings and DeFi yield projects on Beefy Finance and Beethoven, all these other projects and stuff that I was in. I was like, oh my God, I cannot believe I was in so much stuff. And it all ended up for nothing. So the whole industry is still definitely growing, maturing, and there are opportunities abound. But I learned my lessons that I am not good at gambling and finding the next big project. But literally, since starting my DCA and investing everything into Bitcoin and then paying bills using the loans, just this year, I think I've done 175% increase in my sats holdings. So in 6 months, 5 months, I'm up 175% on my Bitcoin. I can't complain with that. So that's all I want to do is stack sats. And to me, that is the narrative you should adopt as well. Like Raoul Pal. So Matt Hougan said this is a 10 trillion to $30 trillion asset class. Raoul Pal said that this will be 100 trillion in 10 years. Doesn't matter which one is right. Both of them are going in the same direction, and that is up. So if it only goes 3x from here, you can still have a 3x return because most of that's going to show into Bitcoin. If it goes up 30x from here, then again, why the hell not adopt Bitcoin as a fundamental piece in your portfolio? All right, so that's all I got for this video. Hope you guys enjoyed that, gave you some clarity, and just gave you some simple ways to evaluate your investment strategy. Like, it can't get any simpler than just stack sats, dollar cost average, regardless of the market, and then never sell your Bitcoin. I really understand that now. Never selling is definitely the way to ensure that you have more in the future than you have now, because you're never going to be able to sell out at the right time and buy back in and catch the dip. You might get lucky. There might be a few of you watching that get lucky, but the bulk of people will sell out and not buy back in, like Raoul Pal said, with the same amount. So you'll end up with less sats over time. So, all right, that's all I got. I rambled on long enough. Smash that HBO special, help a brother out, like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya.